Good Wednesday morning and happy Valentine's Day. Eric here with you. We are a couple hours in to the trading day on the 14th of February, so I just want to give you an update for this morning. We'll see where we're standing and see what we have to look at. Just to recap real quick, the other day we were talking about buying in a test of this 200-day moving average, which we got. That was at 25.39 at the time. And we have since bounced up, and now it looks like we're up about 5.2, 5.3% since that time. So that's a nice little gain for 2 or 3 days time. I don't think you necessarily have to exit that position or anything at the moment. I think that we'll talk to this real quick. We were looking for some resistance on the way up, and we're looking at the 382, which we have been above now, and we closed above yesterday, and we're on track to close above it today, so that's a good sign. So I think that we have now, and I don't want to get ahead of put the cart ahead of the horse or anything, but I think that we will hold up here and see that this level ends up holding. So I think we can start looking for the next levels on the upside. We had talked about this 618 over here at 2743, so that's still in play. But I also wanted to point out that we have a confluence of resistance here, and a confluence is simply whenever we have multiple factors at play here. So we have a Fibonacci retracement from this swing. This is a swing right here. And so we have a 50%, which is not technically a Fibonacci number, but it does act in the market, so we'll keep it in play here. It is sitting right in this area at 2793, and we also have a retracement from this advance over here. So that swing is in play, and that's the 382 at 2699. So that's a level that's kind of in play. So also we have the 50-day moving average sitting up here. So that was we sliced right through that thing before, and then we dipped and we came up here and we tested it on this day, and we were able to get above it, but we didn't close above it. So we consider that a fail at that 50-day moving average, and that's what sent us down to the 200-day to find support. So it is still a resistance that we need to keep in mind. So the fact that we have this confluence here in let's just call it 2700 area. We have 2700 as a resistance. We have 2721. We also have 2743. So we have pretty much a zone that we could kind of look at, and that's kind of how we want to think of this. So we're pretty much looking in this. Well, that's not great drawing, but so this is kind of the area we want to be looking at as a seller, for the markets to kind of keep pushing us up into. So we're almost there now, but as we get into this area, I think that's where we set the stage for a dip back down lower, potentially to test this 200-day or to set a new low, which could go, on down. So we will have to kind of keep an eye on it. But like I say, I think that this area right in here is where you want to be looking to sell, especially for longer term investors. Now on the other side, if we were to just tomorrow we jump up above it, and then the next day we jump up here, and then you got to just kind of keep updating the information you have, and you don't want to obviously sell if the trend is up, but at the same time you never know when that trend is going to switch on you. So just looking a little bit shorter term here, this is a 10-day 15-minute chart. We are in a buy mode here with the S&P's average pushing to a bullish signal there, giving us a buy signal. So we got the high and some of these shorter term swing highs depending on your time frame. We have yet to take out this high, so this is the one that I'm really watching because from a hourly standpoint, that's the one that's the most important, and I'll pull that up for you just real quick. So you can kind of see it. We had the moving averages cross here, and we have started to bounce back higher, but this is the swing high that we need to take out. So that is up here in the 2730, 2725 area. So that's kind of where we want to be at before we can kind of say that we have actually shifted the trend direction, the shorter term trend direction here. The bulls came in here. We had the inflation data. It came out this morning. It was a little bit higher than expected. So I think that opens the table for, or they say it opens the table for more aggressive rate hikes from the Federal Reserve. So if you have bonds, you probably saw them fall today and yields go up. And if you had if you have savings accounts, that will bode well for them as interest rates continue to climb. Of course, now if you have debt, then you're looking at the negative side of it, but we'll see how that goes down the road. But this morning, right out of the gate, we opened a little bit lower. The buyers quickly came in and supported us, and we have since moved up higher, and we have our, this is on a 5-minute chart here. We had our cross right here, and we've taken out the high. So right now we're in a buy mode, and so we'll just kind of stay with it until we are proven otherwise. I wanted to show you and give you an update. Last week I told you I think volatility would subside a little bit this week, and so far that has been the case. I bought $50 puts on the VXX, which is a ETF that tracks volatility. And let's pull out here to a little bit longer time frame chart. So volatility has just continued to get beat up this morning, and I think it is down. And actually, I can pull it up here real quick for you. It is not down as much as the actual VIX is. So we're down 7% right now versus the VIX being down 21%. So that kind of shows you how bad these things are at tracking. Sorry, my phone decided to start recording me, I guess. Anyway, so this shows you how bad these things are designed, or how badly designed these things are for tracking the VIX, and this is one of the reasons I like to short them, because they are poorly designed. So, and it's not by purpose, it's just by the nature, I believe. So anyways, we saw that, like I say, on Friday we saw this cross, so that kind of gave me a cue that I should be shorting, so I did. I shorted going into the close. And I bought the $50 puts. I think I paid $3.80 or $3.90 for those. And they have since fallen. I'm looking right now. I am up 40% on that trade. So that's a nice little gain, to be since Friday. So I think that this kind of continues to play out. But I do think that at some point here, I bought the calls that expired in, let's see here, February the 16th. So I have 2 more days with those. So I don't want to let a gain go to a loss. So I will not be, don't be greedy with those and stuff. Now, like right now I'm seeing, and we'll have to kind of see, but we had a dip down here this morning. We have spiked up a little bit, and now we're putting in we're testing this low right now as we speak. So, if this were to hold and start pushing back higher, that would be kind of my cue that I'm going to jump ship here. But if not, if this, just kind of dabbles around and we end up falling, that's probably where the trend is actually headed to. So I'm going to stick with this one for right now. But if you follow me, you're looking at a nice 40% gain with me. Also, we were talking about Pandora. I think I issued that one yesterday, or Monday, I'm sorry. So Monday we were talking about buying Pandora. I said I was buying the calls. And that's exactly what I did. I bought the $5 calls, I believe. Here, let me just look. Yeah, so we bought the $5 calls, and we paid 34 cents for them. So we're looking for a rally to 5.34 or higher by expiration in March. I think that we end up getting it. So far we're correct, and actually that trade is up about 17.5% right now, so that's not bad for 2 days time. I'm kind of wondering though, if this thing's going to be able to hold up here. It's starting to kind of seems like lose steam, in the sense that, we had some good buying interest down here with the volume pushing higher, and this was kind of actually just consolidating this advance over here. So we've just kind of let the sellers push us back down. I'm kind of wondering though, does that actually, do the bulls have enough conviction to keep pushing us higher? And I'm not really sure that they do, because earnings is on the 21st, I believe is what I saw. But earnings is upcoming anyways. So I don't know if they'll be able to push us higher with that catalyst ahead of us. Once that catalyst comes by, now if they end up beating earnings pretty well, then I'm sure that this will get some legs underneath it. And if it does not deliver, then I'm sure it's got some air underneath it. So, but anyway, so we're looking here at this hourly chart. We've got our cross right here. We're looking for this high right here to be taken out, but we went ahead and bought because we were testing this 618% retracement. So I had told you, I said, we advanced up here and stuff, so this was a good looking move, and so we were looking for a pullback to buy it, so we got it. We had the pullback to the 618 retracement down here, and now I think that this is where we set the stage to go up higher again. Okay, so that's the Pandora trade. I think you stick with it for the time being, and like I say, and I can just tell you real quick when the earnings are. Yeah, the 21st, so that is... a week from today? Yeah. So next Wednesday is when they have their earnings release, so we'll kind of hold on to this one probably until then. The other one I wanted to point out, let's see, I think we, yes. Another one that's actually reports earnings on the same day is this, and this is just a trade idea for this week and actually into next week and stuff. And I'll probably be looking at March expiration calls or to do this with. This is Applied Optoelectronics, and they make parts for pretty much, let's just say their biggest, people that buy stuff from them are the Facebooks and Apples and Googles of the world. I know it's a pretty competitive space, and they have gained and lost, customers and stuff. So I don't know exactly which customers are, if look, it doesn't really matter. So we're looking at this as a technical standpoint. So all that's really irrelevant, honestly. So we'll kind of simply say the reason I was mentioning that is because I saw a headline the other day talking about that Facebook, I believe, was no longer one of their customers, and so that was a bearish sign, and yada yada. So that's a more fundamental question: is are they losing customers? Are they getting pushed out in the competitive space? And this is a very competitive space, so we'll have to kind of keep an eye on that. But that being said, it's very depressed at the time being, and you can kind of see, and we'll put on there just to see. They actually beat earnings here, but it was obviously a bad, interpreted poorly. So just because you beat the bottom line does not mean that it's all clear. If you had declining revenues or you issue a downbeat outlook, then that can cause shares to fall. And this is obviously a pretty large fall to go from $100 and open the next day at 70. So looking at a 30% loss overnight. And then it has continued, to push down where actually, and it's kind of weird here. Now, if you take a look on this one, we actually missed earnings and shares actually kind of pushed up a little bit. So kind of an equal and opposite reaction there, thing. So we're kind of looking now. We have just trickled down, in a pretty tight channel all the way down here. Now we're at $30 a share. Yesterday we were underneath 30. And I actually just about bought this one yesterday, but I did not. I kind of refrained from it. So, I'll give you the setup whenever I find it here, and I kind of put the numbers together. But I do think that you're looking at a potential buying opportunity here for a speculative play. One thing I did want to notice though, and we haven't really talked about, head and shoulders or chart patterns or anything like that, but, there is what looks like to be a, head here, or the head and shoulders pattern here in play. And so basically, if you kind of think about this in the sense of here's the head, and then here's a shoulder, and it's pretty much what it is, you're looking at, and here's a shoulder over here. So the pattern is that you'll have the shoulder put in, you'll have the head put in, and then you'll test the shoulder again. Becomes the neckline here. My freestyle drawing is terrible. I'm sorry, guys. But pretty much now we were looking for this to be a support, and whenever it failed, it opened the door, and that's one of the reasons that it's been such an ugly decline since then. I think that, and the other rule of it is that the downside, once this pattern gets proven, then the downside, is as wide as this range here. So this range was from, call it $60 to $100, so 40 points. So from 60 minus 40 is 20, so that actually gives us down to 20, in this area down here for a potential downside target. While I say it is very much possible, I think that it looks like it's pretty depressed, so I'm probably going to be looking to play this one to the long side. Now, if I find something crazy, that warrants playing it the other way, then we will, and I'll let you know what I find on that regard. Okay, let's see. The other one that I wanted to mention real quick, let's see, Ford, we bought that one the other day, and we have been given a little bit more of an opportunity. It's not a fast moving stock, so it's giving you plenty of time here to be looking at buying it. We were, we looked, we saw this dip, and then up here I mentioned that I thought we would dip back, and so that I thought you could buy that, and sure enough, we did dip back down here to that 10 1/4 area. So, if you hopped into there, you're looking at about a 50-cent gain right now per share. But I think that this is more of a long-term play anyway. So, you're getting a nice 5.5–6% dividend to own this thing. And, like I said, I think it's very cheap. So I think that you're looking to play this one a little bit longer term and expecting this one to rally back. Now, whether or not it rallies back in the next couple of weeks or the next couple of months, that's yet to be seen. Okay. And let's see, what was the other one I want to talk about to you? I jumped into Snapchat yesterday at the close and bought some $20 calls, just because it seemed like that's what it wanted to do. So, the other day I mentioned that I actually shorted this thing. I actually bought puts. It beat its earnings on this day right here. And it jumped by 40%. So I hopped in there and I bought $20 puts. I exited those yesterday or the day before, and that was a nice little gain. So I exited down here. Now it looks like it's wanting to stabilize, and so you see that this low right here, and we'll see it a little bit better on a shorter term time frame. But it has held, so now it looks like it's wanting to kind of rally. So I think that we actually go back up here and test this this high right here. So that's up at the 21.25 area. So I think that we see this, and it may be able to find some footing and keep higher. I don't know that's the likely outcome. I think that once we get up here, we end up setting the stage to kind of fall back down, but that's yet to be seen. So Snapchat, I think you can buy. This is, like I say, a short term. I did a $20 call in March for March expiration, so that's not but less than a month, or right at a month away from here. So I think over the next few weeks we'll see it kind of push back up, and then we'll exit that trade before it falls back down. And I think that's about all the trades I have set up right now for this morning. I'm looking at several names, so I've actually got quite a few that I'm gonna put together here for you. I wanted to go ahead and get most of the technical chart work done before I get on the video, because it's a little bit easier to just kind of wrap up the trade when all the information's already there. So just kind of be on the lookout for that, guys, and I will talk to you here in just a little bit. All right, bye-bye.